Good morning, traders. Welcome to the Studamus Trade Show. In lieu of Friday's video, I am going to do a video obviously this morning. This is Thursday, August 11th. Reason being, I will be out of office through the weekend. And so I just wanted to catch you all up to date on what is going on. Obviously, there's a lot of news. We had CPI inflation reports down more than expected. And I honestly do believe that inflation will continue to decline. We'll talk a little bit about that in this video. Plus, we're going to obviously do the norm, take a look at our dollar. The VIX is doing something new, all right? So we got to take a look at that. We'll take a look at the S&P for some clues and oil. And what are Ethereum and Bitcoin telling us? So the title of this video, obviously, is the FOMO'ers are starting to reappear. So we have to look at whether they are right or not. Should we jump in, all in just yet, or are there still some cautionary tales ahead of us? And I think we can find a few of those, especially from Bitcoin and Ethereum. All right. I'm going to show you what I'm currently in. And actually, I'll probably pull up my KuCoin portfolio and display it up here for you today as well. And we'll take a look at our spreadsheet. And the last point here, obviously, those of you who watch these videos on TradingView have noticed that this video is appearing as a stream. I'm doing that for several reasons. Number one, I tend to run out of time with the 20-minute limit when I just published a video idea. That is the cap on it. Number two, I am adjusting my video settings just a little bit so that I'm not so hard on my graphics card here. I believe the choppiness that TradingView viewers are experiencing is more or less due to the compression that TradingView does on their end. Obviously, they want to save all ideas and videos so that analysts can't go back and delete the ones they were wrong on and just save the ones that they are right on. And so in doing so, that takes up a lot of hard drive space. So I believe they're cutting frames out quite a bit. Really, on TradingView, I'm kind of doing something that they weren't planning on and showing my face and showing a few other things. Really, they just wanted to display charts in the videos. And so I'm kind of finding a way to do more than that. And their system just is not prepared for that. So anyways, the stream finally will allow me to skirt that 20-minute barrier as well. And I believe this video is going to be a little bit longer because I am going to pull up my spreadsheet and my portfolio and really not be in such a hurry. I don't want to overlook critical or key indicators as we go through these weekly updates. So let's get started. I'm going to jump into the charts here and we'll begin with our analysis. Obviously, this is the Bitcoin chart. Let me just go here to TradingView and see if I can adjust that screen a little bit. Sorry for the rest of you, but well, that's about as good as I can do, TradingView people. It's apparently not allowing me to expand. So let's start by talking about the dollar. All right, now you'll remember from last week's video, and I'll zoom in here just a bit, that I drew this M pattern. Now, it's bull flag after bull flag here on the dollar. We have 8 and 9 of them that have all played out to some extent. And I drew this M pattern indicating what I thought could possibly happen with the dollar, and we could see a double top if the Fed was still hawkish on inflation, and we're considering another big rate hike. Now, obviously, the Fed during the last meeting spoke or alluded to the fact that they might ease up. All right, so they might take their foot off the pedal there in terms of interest rates increasing. And I think the dollar is starting to factor that in. All right, so I don't know. This M pattern, it still could play out, guys. But as of now, something else is telling me that it may not play out. What would that be, you ask? Well, we always look at the dollar and the VIX, right? The VIX has now done something that I did say this in the last video, if you guys watched this. All right, I said we're coming down to support. 2 videos ago, I said we're going to come down to support. We're going to touch that support, bounce, and go back up to the 200-day. All right. Now, when I created that video, we were over here somewhere, possibly just above the 200-day. That exactly played out. All right. So then I said, okay, 200-day is going to act as resistance. We're going to hit our heads on that, stay in this channel, and probably go back down and hit support. All right. We did that. And then the next video, I said, okay, we're probably going to spend a few days above this support here. Typically, we don't just break straight through it. I could see us coming back up, hitting our heads on the top of this channel. And then, hopefully, my hope was that we broke that support, both of these supports, which you can see we have now done. All right. So that is great news. Everything is playing out exactly as I have anticipated in the last 3 videos in a row. You would think that I would be making some money here, right? But not the case just yet. We will be making money, I promise you. But that hasn't happened just yet. So what I'm saying, why I'm pointing this out, is the VIX, as I've said in many of my videos, tends to be the predominant indicator. Unless the dollar is doing something super bullish and the VIX is just kind of flatlined, the dollar can take over. But in this case, this big move below, breaking through these support levels, is a huge sign. Very bullish, guys. This is very bullish, at least for short term. All right. And it takes over, and it can tell us what the dollar may do. It can tell us that the dollar will continue to drop and not necessarily form this M pattern. In fact, I'm going to go ahead and get rid of this M pattern now because I don't know that I expect that to play out that way. All right. Still could. This still could be forming the bottom of that M, and we could hike back up and then come back down. Remains to be seen. Right now, it looks as if the market is heading towards that 100-day moving average, and we want to hit that before we make any further decisions. Dollar coming down is good for the markets. I said we're going to take a look at the S&P. And one thing, and the reason why I keep doing this is because the S&P is following the pattern precisely. We didn't quite meet this target down here. All right. I don't know that we're going to. But I will say this. A few videos ago, I said we're coming up, hitting our heads on the top of the channel, as well as this strong resistance. That is a huge area of confluence, and it looked like at that point the 50-day was going to come down and help out, assist with that resistance, and still the market blew right through all 3 of those. S&P did, as well as the neckline of the previous head and shoulders pattern. All right, now what we can do here is extend this neckline out, and here's what I'm expecting for the S&P. All right. So typically, you don't just blow through these major areas of resistance without coming back and revisiting them just to test how much they acted as support and to kiss them goodbye. I like to say kissing mama goodbye. You guys have heard that term before. Since we have broken through the top of the channel, never revisited that, we tried to revisit this red support here. See this candle right here? I tried to revisit that, but didn't quite make it down there. The market was just too bullish. I think what will happen instead, if if we continue to rise, that 200 days definitely going to act as major resistance. We're not just going to break through that. So this little loop-de-loop that I drew here, I think we could come back down and kiss either this 100-day, which is coming across now, or this previous neckline. We could test that one more time before we come back up. And potentially just, maybe we're just moving sideways for a little bit into the end of the year. I don't know. All right, it's too early to tell, but this market has been moving up since 15th of June. The S&P has been moving up and getting stronger and stronger. That's basically 2 months of upward ascension. It's got to take a little rest. All right. So that's what I see on the broader U.S. markets. So should crypto follow suit? It sort of has been lagging, hasn't it? It hasn't really performed the same way. But today we're going to take a look at Ethereum and Bitcoin to see what clues they can give us. All right. So one thing I don't have drawn here just yet, and I'm going to zoom out just a little bit so we can see this better. I know I got this chart is very noisy because I've got all these indicators in here. I haven't gotten rid of them, or I haven't done that the same way I have done on my Bitcoin chart. One thing we can do here is draw this trend line that people are definitely watching. All right. So there we have basically, which it's not going to be 100% accurate, but this gives us a level to look at to where Ethereum may head before it reverses this upward trend. Now, Ethereum has not moved straight up like S&P has, or NASDAQ, or any of the other indexes on the stock market. Instead, what it decided to do was traverse sideways before moving up. It wanted to see what the markets were going to do first, and that's the same with Bitcoin. All right, waiting to see what the markets will do first. Now, it is heading up. Where's it going to go? I think it goes to this descending trend line. All right, but you can see that we have the 200-day moving average coming down as well. And so we could get here an area of confluence, at which point that would be an incredible opportunity. If you are a shorter, my followers know that I don't short very often. That would be an opportune time to place a short bet on Ethereum. I think that level of resistance is really going to stop Ethereum in its tracks. So it has a ways to go right now. That sits right around 2,200. All right, somewhere around here is going to be our resistance area for Ethereum. All right, so it's a possibility that we will continue up for another 15% or so, and then Ethereum leads the altcoin markets, so you can expect kind of the same price action, maybe a little bit more exaggerated in the altcoin space, before we have to get out our caution flags again and reassess the situation. All right, you can see also that Ethereum is getting into overbought territory. All right, this is in a bear market. We're getting into overbought territory in a bear market. So we should exercise a bit of caution here, guys. I don't believe we're just going to break straight through that to the upside, but Bitcoin and crypto in general likes to prove us wrong every once in a while, just to keep us humble. So what is Bitcoin doing? Can we kind of assess the same price action? And the answer is yes. You can see we're in this descending wedge. That is a long-term, very bullish descending wedge. And I mean very bullish, but this is long-term. All right, I'm speaking to you guys, which are traders. You guys are not hodlers here. Now, personally, I hodl most of my crypto, and I trade on the side. It's fun for me. I can, in a bull market, definitely do better than the hodlers. In a bear market, not so much. All right, so probably we even out. Maybe overall my trading does, overall we do just a bit better than hodling. But that is the way that I'm currently treating my crypto portfolio. And really the reason why I'm holding much of my crypto right now is because I have these high percentage APR, hodls that I'm earning good interest off of. All right, so getting back to our Bitcoin here. What is Bitcoin telling us? Is it telling us the same thing? Well, you can see the top of this ascending wedge is sort of the same thing. Now it's closer to us than Ethereum. All right, Ethereum has about 15% to go before it gets there. Bitcoin only about 7 or 8. All right, so it's a lot closer, but Bitcoin doesn't tend to move as fast as the altcoins. It moves faster than the broader markets, but not as fast as the altcoins. All right, so I like to look at it this way. You've heard me say it before. How far am I into this? I wonder if I can tell here. This is the first time I've really done a stream like this. All right, we're 16 minutes and 37 seconds into this video. All right, I like to look at it like this. The markets move at 1x the speed, Bitcoin 2x the markets, and altcoins 4x the markets, 2x Bitcoin. All right, so when people ask me if I do leverage trades, the answer is no, because while we're trading altcoins, you're essentially, in my opinion, the risk is so much higher than trading in a broader market that you're already doing a 4x leverage. Now you can leverage that, and I know people have made a bunch of money and people have lost a bunch of money doing those leverage trades. So I prefer not to do that unless I'm absolutely sure of what a pattern or trend is telling me. And in a bear market, that tends not to be the case. All right, back to Bitcoin. We are in this ascending channel, you can see, which could be a bear flag. Additionally, and I've got it outlined here in black, I'm not sure how well you can see that. I can draw a triangle as well, just so you can see it better. We are in an ascending wedge, which also is bearish. Additionally, we are at the top of that wedge now, and the 100-day moving average is coming down to help out as resistance, providing a very strong area of confluence. All right, right there. That is big. That is a big area of confluence. Let me put that in red. That's something we have to watch. All right, so the caution flags are already coming out on Bitcoin. Take a look down here at our RSI coming up into a major level of significant resistance at 62.73. My phone is talking to me. Google is listening to me and said I was in airplane mode, so they can't interpret. I didn't talk to Google. All right, but anyways, we are into this level of resistance here on the daily RSI. So that is also. And then let's just say we do get through all of this crap above us. That would be very bullish, but we're still not out of the woods yet. Obviously, we're in this descending wedge. So again, what could happen, and we have to reassess once we get to the top, if we get to the top of this ascending wedge, as we go up a little bit, hit the top of this wedge and hit our heads on, that acts as major resistance, and then boom, we fall through all the way back down to the bottom of that wedge around 17,000. And I said it before in my videos, I believe that is actually the low. I'm not on the boat of some of the more bearish traders who tend to believe we're going to 10,000, 13,000. I'm just not there yet, guys, and maybe you are. If you are, you guys should be more aggressive in your trades, and you guys should be shorting Bitcoin and Ethereum when they hit their heads on that, because that would be prime opportunity. I'm not going to do that. But you know what? Put your money where your mouth is. Short the shit out of Bitcoin and Ethereum if that's really what you believe. I'm not in that boat. I think 17,000 will be our low, will be our bottom, and could be a double bottom here. All right, you can see we hit that level before, 17,437. Might as well put a marker right there. And so somewhere in that area is where I believe we form our bottom, and then I believe the Fed will start to either pause or ease their rate hikes, and we go back up. All right. That's the way I'm looking at it, guys. All right. Enough said about the markets. Let's now jump into, first of all, let me go ahead and I'm going to pull up my portfolio here, and then we'll take a look at, just talk about some things. Yep, I'm going to put my actual portfolio, my KuCoin $10,000 portfolio on video here. All right, so here we have, you can see basically, all right, so I lost a few trades, so we're at $9,729 in my portfolio right now. Small decrease, and then about half of it is in USDC. I prefer to keep my allotted cash in USDC, and if I have to go to USDT to make a trade, I will do that quickly. Of course, there still is risk in doing that because you're investing into an altcoin that trades on USDT. So if USDT crashes, you're still kind of stuck. But at that point, I could hold out possibly. I don't know what my strategy is there. There's so many good opportune coins that trade USDT only on KuCoin at least, and not as many USDC. All right, but you can see here, I've got EOS in my portfolio. I've got Shiba Inu in my portfolio, Gods, IOTX, and Cult. And I've split those up about 10% each holding. All right, and you can see Shiba is a little bit more, but that's just because it's gained since my entry. That being said, these right here are what I am holding. All right, these guys right here, that's what I'm holding. All right, how do I get rid of that? Shift F9, I think. I've got this new tool that I can draw on the screen on other things. All right, so I'm going to go ahead and put that back. F9. Bear with me, guys, as I learn these new tools. Put this back down here. Everything is slow because I've got so many tabs open and graphics card being utilized. Now I'm going to bring up my spreadsheet here. We'll take a look at that, and because I've really never discussed this on a video, since I have some extra time today, I will do that. So this I put in every description except for on TradingView. I can't put any of these links in TradingView or they'll ban me for at least a week. All right, I can only put this video up and refer to it on video. But if you go to my channel, studom.us, I will have links there. You can follow me on Twitter. You can follow me on Telegram, YouTube. Twitter and Telegram tend to receive all of my robot posts from my website, but you could just subscribe to me at studom.us and you'll get all these links as well. All right, so you can see the trade tracker indicates all of the positions I'm in. All right, these are my open trades and what I am holding in cash, as well as the ones that have closed. These ones I've got stopped out on. All right, that was a while back. That was like a month ago. I got stopped out on Jasmy, just barely. BTC, just barely. GTC, just barely. And I complain about stops because of the fact that that's what can happen. If you don't put your stops just right, the market makers, the market movers will take you down to those stops, stop you out for a loss, and then the thing takes off. All right, but anyways, I'm not going to complain about that. We have our stops in for a reason. We have to be cautious. We have to trade carefully. We have to have those safety measures in place, especially on a public portfolio like this that all of you are watching. I want you to be safe along with me. I'm not taking any more people down the dark hole, down the abyss that Luna was. I'm not going to cause you all to suffer as I did. All right, so we're going to play it safe. Anyways, we have these 5 trades as already noted, and let's see, F9. All right, so anyways, so these right here, and you can see I have my entry price per token, and this tells me what the spreadsheet calculates based upon the number of tokens and the price per token, what the money into the trade was, and what the percentage of the allocation of my portfolio was in that particular trade. All right, so you can see EOS was a little bit more, but what is at the top right now is Shiba. All right, so we still are in these trades, and you can see my targets here. I've indicated my targets and also my stop limits. All right, so if we get down here to these prices, I would stop out for a loss. We'd have more red on this chart, which I don't want to see. You don't want to see. We need to have, start seeing some green on this chart. I believe we will soon. And these are my targets for each trade, as well as my risk-reward ratio, and most of them are pretty reasonable. Cult, I have a 6-to-1 risk reward ratio because that guy can move really fast when it takes off. All right, enough said about the trade tracker. I will put a link to the this in the description, again, except for TradingView. All right, the other thing I want to take a look at today is my next trades. Actually, let's just go to my holding. We are here. All right, we're in the holding. So you can see EOS here. You can see where my target is, where my stop loss is, and why I took this trade. We broke out of this ascending wedge. Shiba, you can see we broke out of this descending wedge, and it has actually been doing fairly good. Now, one could argue, and so you have to be cautious, a little cautious here, that this is also an ascending wedge of sorts. And if it is, then we're probably going to go back down to this support at 8881. All right, I could see that happening, at which point I would get stopped out. So I may start to take a little bit of profit on these guys. If you are following me, you will only see those notifications at studom.us. If I start to take profit, I will alert you, traders, those of you who follow me in these trades, when and if I start to take profits. And Shiba looks like one that I probably should take a bit of profit on. All right, I probably should take some off the top here today. All right, gods, we have broken out of this descending wedge, but we are fighting with the 50-day and the 100-day moving average above us. So I'm not quite sure as well. It looks like the 20-day moving average is also suppressing us to some degree. But this guy likes to move as well. So I'm going to keep in that one unless I get stopped out. I'm going to keep in that one until we get stopped out. I may take profit if we get up above that 100-day moving average. This is one that I just entered. Was it yesterday? IOTX. Yep. And the reason being is we broke out of this long trending descending wedge. We have been in this since November of 21. And you can see we just broke out to the upside here. We have conquered the 50-day and the 100-day. Also a good sign. So I think you have some good potential here, guys, on IOTX. And this is still a good entry area. All right, and Cult, of course, you know I've got a 6-to-1 risk-reward ratio. Thing I don't like about this trade is we broke below this support as well as this support, which coincides or correlates with the support up here. We are now below it. But Cult is sitting in good area on the RSI. We're down at 45. Now, you could argue that we're still below another level of resistance down here. Let me draw it on the chart. So we've got some resistance up ahead of us, And that coincides with this resistance up here, which was previously acting as support. We are now below that. So that's the one thing I don't like about that. All right. All right, now I'm going to jump over to my next trade list, and I'll show you what I'm looking at. I will share this with you as well. Now this one I can share in TradingView. It's the only, because it comes from TradingView. So as long as it's from TradingView, I can share it. So I will share this in the description as well. I think I can do that on my stream. I think I can add to my stream description. I'm not sure. This is the first time I've done a stream on TradingView that is public, so I'm not sure what I can actually change on here. Anyways, how far into this video are we? See, I get long-winded when I don't have a time limit. Okay, let's just scroll through some of these and show you some. I won't go back over the ones I'm currently holding. BICO has an inverse head and shoulders, and we're currently sitting on support or just above it, which is that neckline. I have a target here of around 86 cents, maybe just a little bit lower. That's a good entry if you're so inclined to go long. I have STX up here. That one kind of has taken off on us already. Above the 50-day, above the 100-day. RSI sits pretty high. I'm not sure if that's the best entry for STX. Doji, inverse head and shoulders pattern, has propelled us already. We broke to the upside of this, above this long trending descending wedge. Actually, this one is not so long trending since May. We have been in this descending wedge, which is inside of a larger descending wedge. Now that one is long trending. This larger one comes all the way, I drew this all the way back from last year, June of last year. So over a year in this one. So if we get to the upside of this smaller descending wedge, do you guys see this here? Let me draw it out for you just so you see it. All right, so if we get to the upside of this smaller one, which is inside the larger one, and that our target does point above that, then likely Doji could see some room to run here. All right, so this is one to watch. However, entry here, it's kind of tenuous. All right, we're up against the top of that descending wedge, which is coinciding with the 100-day moving average, which is coming down, and our RSI is a little bit higher than I like for entries. UMA is another one that likes to run when it does. Do I see anything here? A bit of a head and shoulders pattern, inverse head and shoulders pattern, but the RSI is a little high, as well as we are under some resistance here. Good thing is it's above the 50-day and the 100-day, so it could take off. It could try to go to that 200-day. It likes to make surprise moves every once in a while. What do I have here on OMG? Again, above the 100-day and 50-day, but RSI is a little bit high. I'm not sure I like that one as much. Ape is one to watch inside this ascending channel, above the 50-day, above the 100-day. 50-day starting to curve up. All right, and I can take this trend line, draw it out a little bit more. We're going to use that as support potentially, so it could pop back up and go a little bit further. I'm not sure, again, that this is the best entry here. So guys, I have these on my next trade list, but I do expect a little bit of pullback from some of these guys over the next course of a week or two, at which point you would have a better area of entry. So that is, again, another reason to follow me on studom.us. I'm going to skip down to some of these that I had. These three at the bottom, you heard me talk about on my last video. I was ready to pull the trigger on AAVE because it was breaking to the upside of this long trending descending wedge. In fact, it did, and it took off. You had I think it was about 13% gain yesterday. Now, I didn't enter the trade as soon as we exited because I wanted to see us pull back and touch the top of this descending wedge trend line again. We didn't quite get there. We used the 20-day as support and then just decided to take off. So I exercised caution in my trades. and I didn't like where the RSI was sitting either, pretty high. But it did take off on us, so that one I missed, and that's fine. There's plenty more. What I did take yesterday instead was this guy up here, IOTX. Storage was another one that I was on my immediate list. You can see this bull flag. Still fairly good area for entry, above the 50-day, above the 100-day. Broke to the top side of that bullish triangle, but we have that 200-day moving average above us. You still could, if you entered here, have a potential of around 13-14%. Not bad, guys. The RSI is not too overbought yet. We're sitting right around 59.60, a little bit higher. I like to enter in the 50s on these with a good setup, and that's a little bit higher. All right, XRP looking good. Broke to the top side of this neckline here on this inverse head and shoulders pattern, still in an ascending channel. We are currently fighting with that 100-day. That's the only thing that really gives me caution on this trade. So it still could come back down and use our 50-day as support, but that 50-day moving average is starting to curve up. I like to see that as well. Look at this, guys. We're quite a bit above this support. So again, I might exercise a little bit caution there with that 100-day pressing us down. We could see us come back down and possibly all the way to this support level on the RSI before we continue our move up. All right, so enough said about all of that. I don't think I've forgotten anything or overlooked anything today. Let's jump to our concluding thoughts here. So, guys, as I said in the video, Bitcoin and Ethereum charts are key. They are both signaling that this upwards movement is possible for a couple more weeks, but we still need to be cautious, okay? Until we have broken above that those critical trend lines that are on both Bitcoin and Ethereum. Let me bring up Bitcoin here so you can see it as I'm speaking. Till we break above these descending trend lines, we are still technically in a downwards trend, and definitely we are still in a bear market. This could change should we break to the upside of that, and should we start to see easing on the Fed side, etc., etc., but it hasn't changed yet. So as always, trade carefully and utilize those stops. Best to you all, and we'll speak to you in the next video. Peace.